whenever there is a war in West Asia, most people immediately think about missiles and oil tankers, right? But very few realize that a conflict thousands of kilometers away, it can quietly affect home loans in America, investment in India, even the money that NRIs send back home every single month. And that's exactly what is happening today. According to reports, the US Federal Reserve has decided not to reduce interest rate in 2026. Reason is simple: inflation remains too high. Rising energy prices, driven largely by continued tension in West Asia and disruption around Strait of Hormuz, have kind of increased transportation costs, manufacturing expenses, and food prices across the US. As inflation stays elevated, the Federal Reserve believes that this is not the right time to make borrowing cheaper. Now, you may wonder that why should somebody sitting in India care about American interest rate, right? Well, the answer is because the US economy, it influences financial market across the globe. Even interest rates remain high in America, the US dollar usually becomes stronger. Investors prefer keeping their money in the US assets because they offer better return. As more money flow into the dollar, currencies like the Indian rupee often come under the pressure. Well, for NRIs earning in dollars, this can actually bring some advantage. Every dollar they send to India converts into more rupee than before, increasing their purchasing power. Buying property, supporting family members, or investing back home may suddenly become more attractive because the exchange rate works in their favor. But yes, there is another side in this story. High interest rate also mean expensive loans, rate in the US that remains well above previous level, making it harder for people to buy homes or refinance existing home loan. Families planning to purchase their first home may now have to wait significantly higher month reinstallment as compared just a few years ago. The stock market, it also reacts differently in a high interest rate environment. Companies that depended heavily on borrowing money, specifically many tech firms, often face lower growth. And at the very same time, investors increasingly shift towards government bonds, energy companies, and other safer investment that offer stable income to them. And this is why central bank decisions are watched so closely across the globe. One announcement made in the US can influence property prices in Texas, investment decision in Mumbai, stock market in New York, and even remittance sent by the NRIs to their families in India. And this is how interconnected today's global economy have really become.